This is a very interesting panel about restaking. Obviously, in this year, staking happens a lot of activities happens, a lot of discussions, and yes, we have a couple questions. I think today we have quite like different founders from different backgrounds and doing so different things. We'd love to start with. I'm Ray from IOSG Ventures. I'm doing investment and also research in restaking. We also invest EigenLayer and a lot of ecosystem projects. To start with, we'd love to to you guys give an intro of yourself and what's the project you are doing. Yeah.
Hello, my name is Javi Blanco. I'm the CEO of AutoLayer. AutoLayer is a LRTFI hub that allows users to trade with liquid restaking tokens and also understand better or take informed decisions when it comes to risk and reward on everyone. And right now we are working on a risk management framework and also creating structured products on top of LRTs and also custom LRTs. So that's what we are doing. That's it.
Hello, I'm Grigore Roșu. I am a professor of computer science at the University of Illinois. I'm also the founder of Runtime Verification and more recently of Pi². And here I am on behalf of Pi², which is focused on, so Pi² comes from proof of proof. It's focused on generating cryptographic proofs from mathematical proofs. And with that, we hope we'll have a universal approach to verifiable computing and to settlement.
Hi everyone, my name is Alon. I'm the CEO of SSV Labs, the core team behind SSV. We develop a decentralized infrastructure for this restaking economy, basically running Ethereum validators in a distributed way.
Hey everyone, my name is Marin. I'm Master of Protocol Relations, contributing to the Lido DAO for past several years. Started as DeFi Degen a bit before, actually, before DeFi became a thing in 2017, but learned my way towards DeFi. And now contributing to the DAO that's behind a very strong liquid staking protocol that became a primitive. Very, very different to my starting origins. So security and users and decentralization first. I'm extremely happy to be part of this panel and with this awesome group of speakers because we will touch deeply into restaking and some things that are not so obvious but can potentially shake down the Ethereum itself.
Okay, thank you guys. My first question for everyone, you can take these questions to start because I think you have quite different business. EigenLayer, definitely a restaking coordination engine, and SSV introduced like DBT to staking infrastructure, and AutoLayer is like a aggregator for different ART assets, and Pi² is a ZK proof system, new ZK proof system for universal program language. I think to start the first question is that how do you think about when you're building your infrastructure or product, what would be the main challenges or main benefits, challenge and benefits when you consider leveraging the restaking narrative, inherent economic security from Ethereum? Yeah.
Yeah. So I think infrastructure is an enabler, right? It's something that enables building things on it and ultimately find its way to the mass retail users out there. And I think that one of the interesting things, and maybe very specific to Ethereum in general, staking and then restaking, is that infrastructure plays not just a technical role, but also kind of an emotional, philosophical role, if you will, right? Ethereum and in general crypto was made out of philosophical challenges, and a lot of that kind of trickles down into infrastructure. I can take SSV as a test case. One of the reasons why we built SSV is to kind of align the various protocols that build staking, liquid staking, and eventually restaking, align it as much as possible on the infrastructure level to what Ethereum needs and we want it to be. So decentralized, censorship resistant, secure, and obviously robust. And I think that's very unique to the crypto space, to the crypto community. This notion that infrastructure is not just tech, but it's also philosophy kind of ingrained in it.
Yeah, Lido, Martin, do you want Marin, do you want to take this?
Yeah, I mean, you can probably notice that Lido has done a step huge towards security by implementing DVT. So we have a module that's called Simple DVT because it's not easy to implement it on a full scale right away. And we are actually utilizing SSV and OBOL as well. So the approach is the risk by operating on a consensus level. So we remove a lot of dependencies which were a pain point. It was a very, very obvious pain point as Lido was scaling, where SSV here helped because as you scale, you increase the risk of slashing, and then the amount that's backing up that slashing as policies, or if you're covering it yourself, is not enough. So on the infrastructural level, there was a huge need to solve it because, as you said, the infrastructure is the enabler. So you can see here the unification of two infra levels that enable as secure as possible operation for the users to enjoy on-chain.
Yeah, and a little announcement. We have Nader Dabit joining us, hopefully, finally. Yeah, welcome on stage.
Thank you for your patience. Sorry I'm running a little late today.
Yeah, Nader, do you want to give a brief intro of yourself first, and then we can keep going?
Sure, I'm the Director of Developer Relations at EigenLabs. I've been a developer for 13 years. I've been in developer relations for about 7 years.
Yeah, thank you. Nader, you can, the first question I ask is, what would be the main value, benefits, and challenges when we think about building our infrastructure and product and leverage the restaking narrative and inherent economic security on Ethereum? What would be the factors that we need to think about?
I think if you think of platforms enable innovation, and we see everything from developers building multi-billion-dollar companies to very specialized services that aren't really meant to become companies, but they serve a purpose for their network, and it just wasn't possible before because of how expensive it used to be to kind of bootstrap that sort of thing. So I think it's just going to enable innovation across the board, just like smart contract networks like Ethereum enabled people to build dApps without building the entire blockchain specific for that use case. This is kind of the same paradigm, I think, but for arbitrary proof-of-stake networks.
I think another factor here is that we underestimate composability when it comes to infrastructure. It worked in Web 2. If you look at the tech stack for security in Web 2 and in general the way it was developed, it's definitely true in Web 3. The composability between infrastructure, especially because a lot of the infrastructure in Web 3 is open source and completely free of use. The composability is a key factor. One of the best use cases or test cases I can think of is decentralized exchanges. For years, people said, well, decentralized exchanges are decentralized alternatives for centralized exchanges, right? But when they blew up, it wasn't because they were decentralized. They blew up because of their composability, because you can all of a sudden compose a bunch of different DeFi protocols all together and like Legos. And so that was the major driving force behind the success of all of the DEXs out there. And I think in general with Ethereum, and especially the kind of the roll-up centric of Ethereum, the notion of roll-up centric Ethereum, the composability will play a major role in adoption.
Yep, but to add on the complexity and difficulties, because that part is not touched, it's an obvious example with EigenLayer. So it happened with other protocols as well, because it's a very early stage of the technology, which is very, very promising. But then when you submit proofs, it's very expensive. So having it so expensive, it's actually taxing on the returns from a security network. And then you need to subsidize the APRs, which makes the composability very difficult, and vertical integrations are suffering. So when you think about it, infrastructure is very, very, very important thing as an enabler, but on the side of horizontal integrations, it's a blocker, for example, but then it gets solved by old technology. Like everyone says liquid staking is an old technology, it's outdated, but actually a lot of LRTs are actually battling around this problem by having underlying asset being a liquid state token. Specifically, majority of that asset is STE.
Yeah, I think that's a very important point. I mean, when I think about derivatives as a financial product, it's like, okay, you are compounding a lot of interest here. There is a huge opportunity of generating yield. But also, when you see the risk behind, it's like, okay, this is a product that is on bottom of this product, there is normally not only an Ethereum that has a certain amount of risk, not much, but a little bit, but also an LST that also can not probably, but can generate. There could be a failure on some contracts. So what is really important for me as a user, I'm not building infrastructure, I'm not as smart as you guys, but as a user and as a builder of a platform, what is important for this ecosystem to thrive is to try to understand better risk and rewards and how to make the best. So that's why we are building a risk framework to try to take a look on hypothecation, on DevLabs, also a little bit also on the performance of the ABSs that can be prone to slash, and also on the yield that ABS can generate itself. That it's a really important point that maybe it will take time, and it's not interesting to push the ABSs to generate yield as fast as possible. Maybe our products that need a moderation, but I think when I think about all this ecosystem, it's about risk and reward. I mean, and just try to make the best product possible that will make the ecosystem thrive or not.
I think in that regard, it's important to look at risk not as a constant, but actually it's a kind of a sublinear function. So with time, right? So if you look back 5 or 7 years ago, if you suggested to build a $10 billion company on top of Ethereum, people would say you're crazy. It's an unproven technology. It's going to break. The DAO hack, all of those types of things. And so, but with time, you'll see risk, decreasing significantly to the point where now we're thinking of Ethereum as like this solid thing that nothing breaks and so on. So I think that that's part of the magic in crypto, is that taking risk is something that people do on a daily basis, and then the kind of the industry or attempts at least to kind of reduce that risk over time through just making the technology more proven and bulletproof and using better infrastructure. If we go back to the initial discussion, and somehow it happens in a 4-year cycle magically. So all of that, I think it's to the point where whatever seems super risky right now will basically become common in 4 years, 5 years, or whatever. And it's an interesting observation to look at things that were super risky and now we're basically building blocks on Ethereum that nobody even questions.
So, in addition to everything we discussed here, all the challenges and the risks, in our project, where we try to bring basically all programming languages and all virtual machines to the blockchain, you can bring applications as we are used to write them now in Web 2 to Web 3. So, in addition to all these existing risks and challenges, we are going to have additional risks coming from interoperability. You can have security leaks going across different programming languages, and we'll need to think about that as well. But that will be next. First, we have to deal with existing infrastructure on which we want to build the pi squared.
Yeah, I think quite interesting that you already discussed a little bit about risk. The next question I will give Grigore from Pi Square and EigenLayer, Nader, and AutoLayer, Javi, and because you have more opportunity, or yourself is AVS, one of the AVSs. So what will be the technical risk and financial risk when you're building a network like for example, EigenLayer, have a lot of pipelines with different projects want to be AVSs, and PySquare is like a roll up, and which part of the your technical structure can be considered as like a distributed system and inherent economic security from Ethereum. And AutoLayer, you are asset manager, more like an asset manager. You also need to like think about how to manage the risk for your stakers. So we'd love to hear your thoughts from your side.
Well, I think we are too early to give you a good answer to that question. We just closed our round last week. We are just scratching the surface here. Yeah, so we don't even know yet how exactly we are going to implement PySquare as an AVS. We are exploring the possibilities currently. So I guess I will let Nader tell us more about that.
Yeah, what was the final question? I'm sorry.
Yeah, what would be the technical risk and financial risk we're actually talking about for the AVS systems? Could be slashing mechanism is too early to design, something like that.
Yeah, well, because slashing hasn't been released yet, and we don't really have all of that information out there yet, it is also kind of hard to determine at this moment.
Javi, you want to add something?
Yes, I mean, well, my AutoLayer works on a top level, and that we don't. Of course, we are waiting as many others to see what happens with the slashing. I think it's a interesting topic, and so. But I also understand that you need a lot of consensus and a lot of talks to make it to make everything work well. No, that makes a lot of sense. But yeah, when it comes into risk, I think. Well, when we are creating a retail product, and by that we want to users to have informed decisions when it comes to risk and reward. That's everything I say to my team and to everyone I meet. And well, what we identify as the biggest risk, as for now, the risk that we can assess for now, maybe there will be more. I think. The one we are finding is replication. People doing and develop some on just using different protocols or using replication. That's a tricky thing that can overheat LRTs, and we are just creating an informational dashboard to let people watch how much liquidity is on DEXs and how much replication is, so people can well at least. Notice how prone will be the LRT to generate bad debt in worst case scenario, and also we are thinking also trying to track the performance of the future AVSs to try to see how much at the infrastructure level will be prone to slash. Also, what another thing we are trying to do is to try to, well, this is a bit sketchy, but it's the best thing we can do. As we don't have enough time to do technical due diligence on all AVSs. My team is small, and that's not what we want to do. Maybe probably other people will do it in a very fine way, but we don't have the skills. So what we are doing is to try to see what institutional operators are basically securing different AVSs, and what not so institutional operators are baking AVSs.
There are already a lot of teams and companies that are kind of building out what they perceive to be like high quality analytics risk dashboards, and essentially like them providing that information for people that are coming into this three-sided marketplace and understanding kind of like how that might look. And then I guess for now, we have a risk FAQ on EigenLayer's website that is always kind of like highly up to date. That is a good place to kind of understand the three-sided marketplace that exists as it exists at this moment in time, but also 6 months from now, 12 months from now, to kind of keep updated.
So as I said, we are still very early, but one of the things that we were concerned before we even started with respect to restaking was what if some of the slashing can potentially cascade, and if we have a lot of TVL on our future USL, Universal Settlement Layer, then others would be tempted to attack other protocols, this way cascading, staking, and hitting our protocol, because we plan to formally verify everything. So we want to make sure that everything we have there is correct. But what if our security is affected by other protocols that we have no control over? So I know that I was clear on that, but I want you to also tell everybody that this is not something to be very worried about.
I mean, that's actually, sorry, fair point. So the logic implies there will be more riskier collaterals. That's why kind of restaking is a huge narrative. Industry was so much struggling, then restaking came and it got so adopted with various terms, native restaking, things like that. But then have in mind there's only one way or two ways now to run nodes. So it's either natively, directly you run a node, or you participate in a cluster with DVT. Meaning where I'm going with this. So once you start choosing AVSs, obviously it depends what the collaterals are applicable to them. If they are governance tokens, it's obviously super high risk. It's a volatile asset. Risk-reward ratio, right? If you're thinking Ethereum or in future Bitcoin, we have a huge narrative coming due to restaking about onboarding enormous amounts of capital from the Bitcoin to Ethereum and to participate in the restaking. Or you have even Bitcoin EVMs now, keyword EVMs. But then let's concentrate on Ethereum itself. Yes, it would cascade, but then it's very hard to bring down the whole Ethereum, right? If it's secured by other LRTs, for example, which is in theory possible, now you have protocols that allow you to deposit into liquidity positions, then use the LP token to use it as a collateral. And that's where it gets very dangerous, where it can cascade, because a lot of funds are stuck and they can't unwind. Right? And then it impacts Ethereum itself. Ethereum liquidity directly suffers. By design, market makers will not defend the price. And then we have a cascade reaction, which is, I'd say, an edge case. But a community in Ethereum is known for its risk intolerance and push towards getting these edge cases sorted. So I personally believe that all restaking protocols on the protocol level will put some kind of fail-safe. It's too early because it just got released. It's building up. You can see huge demand. But there will need to be some levels of fail-safes to pause everything or to give time for market to recover. It will not be an instant thing.
I'll maybe take maybe the more pessimistic approach here. I think currently slashing and in general risk on Ethereum is looked at as a kind of a two-dimensional scheme, right? You have the number or the kind of the value of centralization versus how many validators need to get slashed in order to impact Ethereum. I think what will happen with restaking is it's going to turn into an n squared type of dimension. Why? Because first of all, you have n amount of AVSs. Each one of them can affect slashing in a different way. But also, potentially, each one of them will behave differently in slashing. And so it becomes a very complex problem. And I think we need to be, first of all, challenged by it, but also very sensitive to it. The question is, what happens if a major slashing event happens is something that on the Ethereum level can be, not easily, but like it's something that can be modeled and understood. But if you have all of a sudden 100 AVSs which are all tapped into a major amount of stake, what happens if 3 of them slash all of the stake or something along those lines? Now, again, we don't know how it will eventually happen, but it becomes a much more complicated thing to kind of model and consider. And I think again, it's something that we'll have to find an answer to, and I suspect intuitively the answer is don't put all of your eggs in one basket, and more, if you take it to the technological kind of solution is how do you make sure that you don't have accidental slashing, which is the majority of slashing occasions or the way slashing usually works. And then how do you take it to the point where you don't have malicious slashing by hackers, by literally having something slashed. And so I think that intuitively the answer would be how do you distribute those eggs between as many baskets as you can? Because if we model what happens on Ethereum today into the least technological or advanced AVS down the road, it becomes a much bigger issue. And so collectively, that's something we'll need to solve. It's again, it's applications influences the L1, but it's exactly what you want, right? Otherwise, it's going to be a wasteland. Nobody will use Ethereum. If people use it, then you'll have to find new solutions to new challenges, like CryptoKitties did back in the day.
I don't want to talk too much because I've already talked a decent amount, but if you just like look at the nature of a protocol, if you build a protocol and something is possible, then anyone can do that, anyone can build this. So the nature of the proof of stake enables this mechanism to exist, right? So like 10 different people could build this same mechanism, and due to the nature of the protocol, it enables this. And this essentially, like if you kind of are worried about this discussion, it kind of like brings almost a little bit of trust to the conversation, like who is building this? Like, do you trust this team that is kind of building this mechanism and kind of in your head maybe bringing this risk or something? And that was the first question that came to mind, honestly, when I heard about this. And let's say that it does kind of get a lot of the TVL that we see today, where we are today, at some risk of slashing. And what really was interesting to me when I actually learned about how this was built, like from the very, very early days, we're talking about like 2.5 years ago, day one, they've worked very closely with the Ethereum like research team directly to kind of have questions before they're written into code. Is this a good approach? Oh, it's not, like let's go back and change things. And that integrity that the team had like early on before it became an actual thing was kind of interesting to me. So I think that's also a consideration, I guess you could say.
No, but like you got me concerned here a bit because I'm in a space for a very long time. I know you are. I remember you. I listened to your talks on Shift back in the days. Like you're a true OG. But what I learned from my experience is trust but verify, and where I struggle is yes, capital amount deposited shows a lot of community trust. But still, there are multi-sigs which have people that are not disclosed. They can upgrade portions of the protocol. So until the technology matures to a point where it can be automated or it transitions to full DAO, or it has maybe in future new models of how we can make it trust robust, then I would be comfortable going all out on the new technology. Before that happens, I do have trust issues because as you know, it doesn't need to be designers behind the SIG. It can be hacked, phished, Rensky attacked. There are various things that can happen, and if future of Ethereum depends on it, I would think twice. So only that.
I agree 100%.
I would like to add formal verification to all that. I know that both EigenLayer and Lido are very serious about formal verification, and we've actually worked together on various occasions, so I'm confident. But I think we need to have some formal model, formal specifications that guarantee that if certain global properties are preserved, and global invariants are preserved, then as a particular application, I only need to guarantee certain properties that together with the global invariants give everybody the peace of mind that things are okay. Of course, there are other risks, accidental, or at least it will prevent accidental risks. But I think considering what is at stake here, formal verification should not be even negotiable because we've seen so many silly errors that led to catastrophic failures. And if those catastrophic failures now can be amplified, that's just, something to be super concerned about. I think we should take formal verification as the standard, the basic minimum standard, and then do other security analysis on top of it. But if I have to worry about maybe that protocol does a division by 0 or something so basic that, that's I would like to add on top of everything you said.
Yeah, we shouldn't use the word trust in crypto at all.
Yeah, I will follow up one question here. We talk a lot about risk. I want to talk about opportunity, but before that, for example, I'm a risk taker as well. When I restake my assets, I want to know what actually the assets what's the AVS that actually inherent my security, and what's the opportunity, what's the there are a lot of like distributed system can be defined as the AVS, but which one is more relevant when we talk about inherent economic security, and which are less relevant just for fundraising narrative? I would love to hear your thoughts about this.
So the question is kind of what AVSs are people building today, and how are they able to fundraise, and like which, I guess, different categories?
My question is like, from the first principle perspective, what are the more relevant network that could be more fitful to use economic security from Ethereum? And what kind of like network is less relevant when we talk about this topic?
I mean, I think like if you kind of look at what already has product market fit, it makes sense to consider those as potential products that people would build. So they're different, they're all sorts of things, you know, storage networks, coprocessors, decentralized sequencer networks. I do think that anything that can be built as an AVS will essentially be built as an AVS. That means new things, that also means building the same things that already exist in different ways, and often more specialized ways. Because if you think about, if you wanted to build a very specialized service, it wouldn't have made sense to build something and bootstrap that entire security network from scratch. But if you need it for your application, you can actually build it as an AVS, and you could be the only consumer of that. It actually makes sense for the first time ever. So I kind of like would say I can't really think of anything that I wouldn't build in this manner, but that doesn't mean that I think that everything should be replaced or anything like that.
No, it's actually, it's a security marketplace when you think about it. And any your favorite dApp, your favorite bridge, anything can be an AVS. Anything that essentially requires a special rule set that needs to be pushed on-chain. Where the interesting dynamic will be, what's the price of that security, which will in future generate the returns, the restaking, right? Those collaterals attached will receive rewards from securing these AVSs based on what operators cover. So at some point, where I'm interested to hear your opinion, or anyone in the panel as well, what stops a network, for example, from bootstrapping by being an AVS and then hard forking towards own security models? Because I struggle seeing optimism, for example, in Arbitrum saying, yeah, this works, but let's be an AVS, and it doesn't make sense. But what if a new L2, which can be an AVS as well, becomes as big and robust, and let's say price of security goes too high? What stops them from just splitting?
I don't think anything would stop them at all from that. And I think if you have built a product and you now have $100 billion and I don't know, like value in your token, just build it, if you rebuild it as an L1 if you want to do that. That would be awesome. It would be great if we saw a bunch of people doing that. But I don't think there's anything that I would say would prevent that from happening, or even be a valuable, like, I wouldn't kind of say that shouldn't be done even, I would say, maybe.
I may want to give an analogy here. So we have this ocean of liquidity right now, right? And so the immediate things everyone is thinking is everyone needs to build a boat. But not everyone needs to build a boat. Some will build ferry, which is like a very commercial boat and will travel and be very successful in that. And some will do recreational sport, and some, like, there's layers to it. It's not just one thing. It's not just about security and everyone just goes towards, you know, the biggest L2 they can think of. I think there's going to be layers to it. And the interesting thing about it is not actually the use cases we're thinking about right now, because a lot of them are actually already bootstrapped, right? We're thinking with existing tools. But what is the long tail? Like, what is the hundredth or a thousandth kind of AVS that will follow, how will they use EigenLayer or any other of the other risk-taking protocols? And not just how they will use, like how much security do they actually need? And how do you value security? Because again, if it's an ocean and everyone is using it, like do you divide it equally, or like some have more security needs and some has less, and so on. So I think that model is interesting, and I think the idea that you can tap into it is super interesting. I'm actually very interested about like how do you build small things as an AVS? Like how do you build something which is, I'll give maybe a Lido, like how do you rebuild the Lido Oracle, for example, as an AVS, right? Where it's permissionless and everyone can tap it. It's a very specific use case. It's not something that needs, well, maybe in case of Lido it does need a lot of security, but like in other cases it doesn't. So that's a very interesting, it's like what we find in solo staking, right? Like, sure, there's Lidos, but we also want solo stakers, and basically it's the same technology, but how do you encourage solo staking and so on? So the long tail, I think, is super interesting. Not necessarily what we now think needs security, because they already have security, and a lot of those are transitioning because of hype, or because of marketing, or because, like, what are the real use case, not that need $5 billion worth of security, like need $1 million worth of security. If we can answer that, I think that's going to complete the puzzle here.
That's actually a fair question. To add on it, like, a lot of things does need a little security, but then again, there are griefers who would happily attack it if you don't have enough security. So I expect a little bit of DeFi summer 2020, right? When various random attacks happened, that actually showed us, oh yeah, we can't do this in this specific way, so let's tweak it.
Yeah, but it goes back to any security model, like any encryption model, any digital signature verification model. It's always built on good enough security. There's nobody's building amazing non-bulletproof security. It doesn't exist. So what is the good enough security, right? If every encryption on the web was, I don't know, like 4K keys on RS, like it's going to be very difficult to spread it around, right? Especially with 20-year-old computers. And so they started with something much simpler to kind of capture the risks of yesterday, and today we're doing it and upgrading it. And so what is exactly those parameters? Like that's the interesting thing, because currently what we're seeing is basically not everyone is getting all of the participating ETH on EigenLayer, but it's like if you go and look at the top AVSs, they are like it's basically, you know, let's participate in many AVSs as we can. And obviously that's not a model that will work. So the interesting is what if we'll have 1,000 AVSs? Like how do you secure that? Both for the AVSs, but also for Ethereum.
Yeah, when thinking about the incentives, the AVSs should deploy at a certain point. I think maybe it doesn't apply to every service, but for certain service, this could make sense to have a min cap and a max cap. So people can say, okay, I just need to secure 1 billion because I will deploy later incentives, and I just wanted this to be efficient and to not to dilute the incentives between all the billions on EigenLayer. You know, so yeah, that could make very much sense. But given the heterogeneity of the AVSs, maybe this is not. But this could be interesting in terms of, okay, to secure my protocol, I need this liquidity, and maybe other people need other, and we can have a more decentralized scenario, which maybe have many good outcomes. No, so yeah, that could be interesting. Also, when I think about AVSs, they are software as a service now, and I also think that, okay. Why don't we start meter them what the money they require and the incentives they deploy on a second base, on a time-based framework? Not like, okay, I will need this security for this 3 seconds as many other software as a service work that they work on a time-based they charge you on a time-based way. If we can create a more granular economy, time-based and volume-based economy. That could really work well in terms of capital efficiency and in terms of being more fair with the risk takers. So that could be, that's something is not on my hand, so just a random thought. So just that.
Well, I forgot what the question was. But I like the idea of bootstrapping through an AVS and then potentially starting your own decentralized network if it grows in value and the security needs change. That makes a lot of sense. But that was not the question, right?
Yeah, maybe Grigore, you can share a little bit, like think about like PySquare, which section of the whole technical structure you think is more relevant to think about we can leverage this security marketplace.
Sorry, can you
Can
repeat?
you repeat, please?
Yeah, PySquare, for example, for PySquare, it's a proof system, like layer 2, and which parts of the whole architecture, for example, sequence, whatever, you think is more relevant to leverage economic security to bring value to your network?
I don't know. I think the bootstrapping part is the most attractive part to us because we do not want to implement a decentralized network ourselves. Right now, what we want to do is to generate ZK proofs for executions in any programming languages using a certain technology, which is a totally orthogonal aspect to validating, verifying, and all that part, which we just don't want to do. So for us, EigenLayer or an AVS on EigenLayer is the cheapest way, fastest way to get to a product. And that's really the attractive part. And then there is the concern about security. We know formal verification, but then there are other related issues, which I think we are too early. We'll figure all these as we go. I don't think we have answers to all of this. But the bootstrapping is the part that is the most attractive to us right now.
Yeah, I mean, like we're seeing coprocessors, provers, like arbitrary verification becoming really popular with rollups. And if you kind of think about what's possible now versus what might be possible with a specialized oracle or a specialized verification layer, you're kind of like bound to what existing oracles are around at this moment. And you're kind of like bound by what they expose and their APIs. But let's say there's something that's in real life, off-chain, that you want to verify in your smart contract. You can basically build an AVS that does that. You want to verify a sports score. You want to build out something like, I forgot the name of it. There's like a really popular, application that you can bet on like the presidents and stuff. Like if you want to build something like that, you can actually build it pretty easily now. And you can actually verify what you want, and that's differentiating at the app layer. So like you're not bound to what exists. You can now kind of create your own thing, and you now are like setting yourself apart at the app layer, which is kind of like ultimately where we want to be. So I think like these specialized verification systems are really interesting to me, and a lot of like roll-up teams are actually building that as their core differentiator. So when you hear someone saying, I'm launching my own roll-up, often it doesn't actually mean they're just trying to kind of like shill a new token. They are building something different, and that's kind of cool to me.
I have a kind of a thing I've been thinking about recently. We're used to talking about restaking as a platform, right? You have restaking platforms and AVS is on top of them, or whatever the equivalent name is. But like, imagine you have every validator can give slashing conditions or give slashing permission the same way ERC20s give approval for withdrawing or transferring from the account assets, right? So that's a primitive that everyone uses. All of the DevR protocols are using approved transfer schemes in order to do anything, basically. Now imagine you have the equivalent to validators on a global level. Everyone has that. That's a very interesting primitive that maybe can go in beyond just economical security. Maybe there's a financial benefit here of reutilizing your validator when it sits down and does something in other use cases, maybe DeFi, maybe others. This kind of notion of programmable validators is something that could be very interesting in this. Again, not everyone will do that, but the concept of this, I let you reuse my validator or the value of my validator for something could be a really, really cool primitive in maybe other use cases, not just bootstrapping security. It could be maybe other things as well.
So that's one of the loose ideas, obviously floating around the Lido DAO, giving the most robust node operator set in the market, that potentially there can be built modules for specialized node operators to rent the whole set, so to speak. So I really like that idea and the way of thinking, and it's something that has crossed our minds as well.
Okay, we nearly run off all the time, and thanks for your insightful information and insight sharing. Yeah, thank you guys. That's the end of the